Not a problem.
Yeah, I'll definitely watch. I'll probably watch the record anyway. 'Cause I'm not going to hear it as well in here, but I'm going to try and listen. So,
Mate, enjoy your mini fillets, all right?
Enjoy.
thank you, thank you.
So yeah, so it started. It kind of just happened naturally, and then the YouTube stuff. I just love it. Look, my profession is I'm a sales coach. That's what I do. I spend my day 9 to 5, not 9 to 5, but anyway, I spend my days coaching people how to sell medical insurance. That's my job, and I again very similar. I've worked up from a salesperson to a manager, and I run a team of 40 guys now, and my job is coaching, and so the skill set translated really well, and then we're here. It was never meant to be a paid for mentorship. It only ever happened because the group started costing me a lot of time and obviously bits and bobs in kind of equipment and editing costs and that sort of thing. And for me to take it to that next level, I've had to employ designers and things like that. So this has never been a money-making scheme. This has always been about trying to just help people and build a really nice community. If you follow me on Instagram, you've seen that I'm promoting these boot camps at the moment. I want to bring in really good people into the group. What I could do is I could monetize it by offering unlimited spaces, $100 a month, and that's the way that a lot of mentorships work. I don't really like that setup, if I'm honest, and I don't really want hundreds and thousands of people in here. It creates a messy environment with lots of mixed strategy, and I don't feel like that's conducive to community that's going to grow and develop together. So the entries for the boot camps are the maximum I'll do them was once a month. There'll be no more than that. I probably, because it will take an entire weekend, I probably won't do much more than that, and there'll be 5 or so members joining a month with that. Vickers and Peter and another third guy, they snuck in the back door. As you know, the group was closed and I accidentally left a link, and then I woke up one morning and they're like, hey, how do we get in? We've paid. And I was like, hey, brilliant, let's get you in. So they got in at the fantastically low price. So welcome, guys. My mistake there, but look, I'm glad to have you here, and it shows the tenacity that you have to join the team, and I love that all day long. Anyway, enough about me and this all boring stuff. Let's talk about some candles, shall we? What are we doing today? What are we doing today? We had a few questions in the group. Should we have a look and see what we got? Where are they? Are they in the community tab? I think they are, aren't they? So we got Arthur's question. Somebody else asked a question earlier, didn't they? Is it Sam? Sam, I think, asked about momentum markets. I think potentially. Did you see my response earlier, Peter, to your charts?
I did, thanks.
You did. Did that answer your question?
Yeah. I was just, it was more a case of, if I was looking at just from the setup point of view.
Yeah.
Actually, I had a look. It was exactly at 2 o'clock, that setup.
It was, yeah. Okay, so it would have been like basically a New York Open session, a trade utilizing probably the New York Open trap. I'm not sure if you got to that video yet, but just in case you haven't,
I've watched it once. So
it'd be a trap, basically a trap entry.
Yeah.
We had another question and I didn't save it. How to catch trades in high momentum markets? Okay, cool. So me and Sam did a one-to-one this afternoon. I don't think Sam is actually here, which is cool. Let's talk about that, because I think it's a really valid question, and we had a bit of a chat about it today. So let's jump onto the charts and let's go through some understanding. So you'll find, tell you what I'll do, I'm going to delete all of this, and then we'll come back to this bit here, because this is quite. We'll probably come back to this bit and go through it. So, high momentum marketplaces, okay, and how do we get into them? Okay, so it can be quite difficult to get into the market when it's moving like this. Okay, see this little move down here, yeah? Okay, and FOMO is really tough in these moments. Okay, that fear of missing out when you've been, let's say you're here and you've been entering over and over again, for example. Okay, so you've been waiting for this big move, and maybe you've been stopped out a couple of times, maybe you've missed the position, maybe you got into all of these and then you got stopped out on that big liquidity raid there. Okay, these moves, when they happen, can be really frustrating, because then you don't actually know. Where's my controls gone? 2 seconds, guys. You don't actually know. Oh my god, I think it's going mental. Just make sure you can see everything. Right, okay. Yeah, so you don't actually know how to get into them, okay, when they move like that. So obviously, the logical way to get into these trades is to wait for a pullback into premium. Okay? Why do we wait back? Why do we wait for a pullback into premium? Someone's got to have the answer for me.
Because that has the highest probability of success.
Exactly. Okay? It's the high value area. When you want to sell something, do you want to sell something when it's discounted?
No.
You don't, do you? Okay, you don't want to sell something when it's discounted. You want to sell something when it's at a premium price. So think about just basic supply and demand theory. I'm not talking about trading supply and demand. I'm not talking about zones. I'm talking about supply and demand theory, the art of buying and selling something. You want to be selling something when it's at premium, and you want to be buying something when it's at discount, okay? And that in its purest form is the reason why we wait for price to come back up here, and the reason why price often pushes back into premium. Why do the institutions and the algorithms push price into premium?
Rebalance their orders.
To rebalance their orders, exactly. So what we're waiting for is we're waiting for orders to be rebalanced. So that could be in the form of imbalances here being filled, okay? That could be in the form of liquidity areas being taken out. And the reason why that happens is because there is a constant and ever-flowing momentum in the marketplace from premium to discount to premium, buy side to sell side to buy side. Okay, so when they are selling down here, remember they're still buying up here as well. And they therefore need to settle those buy positions, okay, because the institutions and the algorithms are in the marketplace in both directions at all the time. They just have more sell positions here at this point and more buy positions here at this point. And that's what creates the constant ever-changing ebb and flow of the marketplace, okay? There has to be equal and opposing supply to equal and opposing demand, and that is why price moves up and down. So when price comes down to here and takes out external liquidity points, in an ideal scenario, and when we have ranging marketplaces like this is where you get the up down movement. Okay, so ranging marketplaces, if you can time the trades correctly, you can actually get into some really nice positions. Okay, but every single one of these, as you can see, is utilizing that theory of premium to discount, discount to premium. Okay, buy side to sell side to buy side. And when you have fast moving marketplaces, this is when that can be obviously really difficult to get into those trades. Okay, because let me just do that, on my OCD will go mental. Okay, because often when you've had, say, key liquidity clearances and a really nice move like this, okay, often price won't come all the way back up. Now, what's the only thing that price has to do, more so than filling in imbalances, what's the only thing that price has to do in most cases before it moves down further? What does it have to meet?
EPA.
EPA, exactly. And why does it have to meet EPA?
To balance everything out more than the fair value gap.
Exactly. And do we know why? Do we know why? And I'm testing. I'm going to start in these sessions kind of testing you guys more, because rather than me just talking at you, do we know why it has to rebalance? Do we know why it's drawn to these areas so drastically?
Because it's a market and it has to be fair for everyone.
Exactly.
Okay.
So when we talk about supply and demand, or premium and discount, okay, we're talking about a very specific part of an area, okay? Just get rid of these. So when you look at this move, if I were to ask you where would the supply zone be drawn from, can you guys draw my chart, by the way? Do you guys have the ability to? Is it possible?
Yeah, we can.
You can, okay. So if I was to say, in this range here, where is the supply zone based upon kind of classic supply and demand? Where would you say it is?
Well, for me, big picture, it would be at the just about at the 25% there.
Yeah. So here, right?
I mean, big picture. I mean, you can go, yeah, just like that.
Okay. What theory do we often use when we talk about supply and demand? So if you were drawing out, or like an order block, for example, what's the normal?
The last up move before the down move.
Exactly. The last up move before the down move. So a lot of people would say that's actually the supply zone. Okay, that level, that area there. Okay, the last up move before the down move. Okay, and that would be a pretty clean supply area. Okay, pretty valid. Does anyone know what the actual supply area is and why?
I think it's all the way down at the bottom there.
Yeah, that's it.
Right.
So the actual supply area is
Right there, yeah.
the origin of the move all the way to the high. And what people are effectively doing when they're teaching about order blocks or supply and demand zone is they are finding tighter areas within that entire supply level. They're finding tighter areas that provide them with higher value trades, so that when they take that trade and hold it down to the external level, opposed to when they take this trade and hold it down to the external level, they make more profit. And they package it up as supply and demand trading, when actually it's not supply and demand trading anyway. It's a very specific part of a supply zone trading and a very specific part of a demand zone trading, if you want to be technical about it, all right?
Yeah, it's more of an order block than a supply zone.
Exactly. If we are supply and demand zone trading, that is the supply zone. The supply is the entire move, okay? And that entire move that raids out that liquidity. So the reason why, in my very convoluted way of getting to it, the reason why we don't need to come into 25% in momentous marketplaces is because the only thing that we actually need to do is to make that range efficient. Because as soon as price moved away like that, this is now inefficient, okay? That move up to that move down, this area is efficient, okay? Because the bullish move has been rebalanced with the bearish move. But this move down here, and ignore that white candle, this move down here, right now, that section is inefficient, okay? Which means that there are positions at net loss, okay? With the same theory in mind as imbalance theory, we want price to come back up and take our EPA, and you'll often see that there's quite good reactions from these levels. Oh, also, right, fantastic news, guys. Look at this. If I click 5 minutes now, it doesn't delete my chart. That's good, isn't it?
Oh, nice update.
Yeah? I know to most of you that may seem not anything at all, but when I used to click, well, you've been on webinars where I've been swearing at the chart. Because if you it forgets where you are. Look, it's gone. They've fixed it. And now I can just jump down to whatever, okay? So, you'll notice that when EPA is reached, it often has a nice reaction, okay? In this instance, what we've done is we've filled in some of that imbalance up above, okay? But, well, you've seen it, maybe not on this example, but you've seen it on charts a million times before. Price coming in, tagging that EPA and rejecting straight away. What we've done in here is we've just taken out more imbalance, okay? So, coming back to where we're talking about, okay, and also the other thing, the other thing that we need to mention as well, okay, is EPA is very low, okay. That move, okay, if we look at a measured move, okay, that move here, okay, we would normally expect that move to be measured, okay, and often what happens is that you have an equal and opposing move, which means the EPA then is then in line with the equilibrium of the range, and therefore EPA responds really, really well. When the range isn't large enough to create the same measured move down as it made up, then often what will happen is price will come and it will rebalance the zone. This is no coincidence, guys, that price has tagged the EQ level and then immediately rejected, okay? Why has it tagged the EQ level and immediately rejected? Can anyone tell me?
Just efficient pricing, there.
Not necessarily efficient pricing. What else is it? Look at that, literally perfect, literally to the pipette. So the EQ level is the exact rebalanced range of the entire move, okay, that is the first moment that we are at an area of value to continue selling, okay? And this is why we say when we are in momentum-based markets or when we are looking for sells, so on this range, this is kind of a 30-minute range. So I wouldn't be selling in this discount zone here, okay? I wouldn't be selling in that discount zone there. I'm not interested in that. Okay, that discount zone, I'm not going to be making a sell into that, okay? For the obvious reasons. It's low value, okay? You don't want to sell something when it's discounted, right? If you bought a load of products at a discounted price, you don't want to sell it. Sorry, if you bought a load of product and the price came down, okay, and it was at a discount, you wouldn't then sell it. You'd wait for the price to come back up where it's at a premium to then sell it, okay? And we're not at a premium until we reach that equilibrium level, okay? When we talk about premium and discount, there's one thing to make sure we're clear on, okay? The discount area is actually the entire 50%, and the premium area is actually the entire top 50%. So when we talk about pure premium and discount, it's the top half and the bottom half of the range. Very similar to supply and demand trading strategies, what we're looking for is higher value. So where we see our value is in the bottom 25 and the top 25. But technically, we are at a premium when we reach that halfway level, which means if we want to look for sells, we are able to look for sells as soon as we touch that equilibrium level. And as you can see in this example as a perfect illustration of that, it often won't wait for you. And if it's really momentous like this, then we can see it's just literally tagged that and then pushed away from it, okay? So it's really, really important to understand that we wouldn't be selling. I'd be probably looking for buys in here, okay? Looks like we've got a little buy there. Asian range, took out liquidity, tagged into an imbalance. We had then some bullish structure, probably on the 3-minute, 5-minute time frame. ISC there, probably. I think that's probably an MSU as well. So we could then enter like that. And where would we hold that trade to, guys?
Most recent liquidity point.
No, not necessarily. So we
like
are
50. The equilibrium.
Yeah, yeah. Well,
50%.
there's two areas. You could hold it to EPA because that's one of the first areas that we're likely to see a reaction of. Okay, but you're right. In this example, we would hold to the equilibrium. Now, this is quite an interesting one as well. Okay, because as you can see, that's pretty perfect on there, but you'll see lots and lots of times you'll have rejections before there, and sometimes what will happen is it won't get completely there. You'll also find that sometimes when you're holding your trades, it won't quite get to its liquidity level and sweep it. Sometimes it just creates equal lows and then it rejects. So one of the tips I give you guys is that if you're aiming for a target, let's say it is that equilibrium level in this example, always go with a price of one of the following variations, okay? So you want a price at 0, 0, at 5, 0. Okay, those are your classic kind of psychological levels. So if we're looking at price here, okay, and we are, a good area would be 1.6100. Okay, that'd be a good area to go. Or maybe you're feeling not as brave, so you're going to go 1.6050 maybe. Okay, like if I can get it there. Okay. The other couple of things that price often responds well to is 20 and 80. Okay, 20 and 80. So let's just look, if we take that to the pipette, let's see what we get on this one. Okay, that's 134, so slightly over. But the numbers 20 and 80 come up quite a lot as well. So one thing just to bear in mind, if I was taking to equilibrium, I would probably take my profit out something like what we've got there, 1.61. Okay, nice psychological round number. We tag into that when then we take our profits out. I would probably be mostly out of the EPA level anyway because I've got 2.6 out of that. Then I hold a little bit up to that 5.3, and then everything's good. Okay, so that would be what I'd be doing if I was buying from there. And then from there, you can just sell. And if you see this kind of big breakdown, we're on Tuesday by this point, so you've had a corrective Monday. We'll be expecting a move down here, and then you can just hopefully hold that over a couple of days and get yourself some nice profit. And then if we get out, do we get out? No, you'd been stopped out for a break even. Hopefully you got some profit off there. What does price actually do? Does it come back into premium? No, it doesn't. Okay, and then it starts moving down. So the original question was, what do we do when we're in high momentum marketplaces? Okay, so when the market moves like this and we're in high momentum marketplaces, your only option is one of two, okay? Option number one, where would you get in? If you look at this range here, where would you have got into that marketplace? Anyone tell me? So I would have got in at the sweep at that level. Okay, sweep at that level, and entered into this section here. However, a bit of a trick question. We can't get into that because that's in Asia, so I'm asleep. Okay, London then doesn't give us a suitable entry. Okay, the only entry that we get is this, and I think there's a New York trap there. I can't get down any lower, guys, sorry, but I think if you can see the little New York area here. I would assume that's going to be a trap. Okay, so my only option really on this chart and this time frame would be enter like that. But why would we not enter into that trade?
Selling in discount.
Because we're selling in discount. And what's it very, very likely to do?
Push back up.
Push back up. Why?
Well, because there's premium pricing higher up.
Because the premium price is higher up, but we're in discount. So what are people doing when it's in discount?
Buying.
They're buying. Okay, so what often happens is that. Okay, and this is why sometimes you just have to accept the fact that you're going to miss some trades, and that's okay. Okay, these would be classed as B grade setups because they're in the lower area of a range. Okay, yes, it's very heavily momentum based, but if you try and catch these trades, that would have been the only valid trade, but that was overnight. This is what is the difference between A grade and B grade trades. An A grade trade has all the confluences lined up. So this is what me and Sam spoke about earlier. Let me just, oh God, that's, did I draw? Oh, I did draw that, no. This is what me and Sam spoke about earlier, is A grade and B grade setups. Okay, so let me just get down to the time frame we're on. 2 seconds, guys. So what they haven't done yet, they haven't actually done the whole, when you change time zones, it doesn't jump everywhere. That's an annoying one. Okay, I think it must have been on the 30 minute. Yeah, okay, cool. So the reason why A grade trades work over B grade trades, so B grade trade would have been the blue trade, A grade trade would have been the orange trade, okay? The amount of positive confluences to your trade are greater with an A grade trade than they are with a B grade trade. So our B grade trade, what positive confluences do we have? Well, we have momentum, we have an imbalance to the left. Let me show you it, which was that one there. We have an imbalance to the left, as you can see there. We have momentum, we have imbalance to the left. We have an external level below that needed to be swept. And we had, we had momentum, imbalance left, and engulfing, okay? Which was this little pattern here. So if we were taking that, we acknowledge that it's a B grade trade. We know that there are confluences against us, but with the momentum, we are prepared to take it at risk. What I said to Sam is what you often might want to do is make sure you get that position and then use some of your wins from this position to enter into that higher risk position. Similarly to if you're at a casino and you've just won big on black 18 at the roulette table and you want to take another risk and put some more money on, oh no, let's say you've won big on red, okay? You've won a load of money on red on the roulette table and you now want to take an extra risk and maybe play the first third of the table, okay? You need to take some of the wins that you've made and put that on that bet, or in our case that trade, acknowledging the fact that this is a B grade trade and is less likely to come in, so you're only going to bet what you can afford to lose. Okay, same principle applies here. So ideally you'd be in here to catch the sell-off, take some profits out, and then use some of that profit to add back in, knowing that if you did push back into premium, you would have at least had some profits still left. Okay. The other problem with B grade trades is that you have lots of confluences against you. We've just swept an external level, we are in discount pricing, and we have a massive imbalance above. So these are all factors that would indicate to us that this is actually a high risk trade. Okay, and also, as you can see there, there's an EPA level. So we'll put that in as well. EPA level, okay? This is one of those rare examples that EPA hasn't been met, but technically, if you look at a higher time frame, EPA, no, it wasn't that. No, actually, sorry. It was met because that was the EPA level. We had that pushed down. It was rebalanced there. So that technically is our EPA on this chart. Okay. So why is this A grade trade an A grade trade? Well, firstly, we have more reasons to enter. We have momentum. We haven't. So this is if price had pulled all the way back up. This is what we're talking about. We're not talking about this move. We're talking if price had done this. So we have momentum on our side, which is that momentous move there. We have imbalances to the left. We had probably engulfing pattern because we don't enter without an engulfing pattern. We had a liquidity sweep of the range liquidity, which would have been that level there. Okay. We had premium pricing. We had more potential, so more room for the trade to move. Okay. And we had less reasons to not get into it. Okay. We had already swept the buy side liquidity. There was no imbalances left by the time prices come back up here. We've taken out that major level, these major levels here, and we are in a downtrend. So this is where your kind of pros and cons list will really help get you into better trades. And sometimes you will take B grade trades, but a lot of the time you take them and you find that you lose and you get frustrated and you think, why did I take that? It's like when I trade Mondays, I'm like, why am I trading on a Monday? I hate trading on Mondays, okay? So what we've got to do as traders is we've got to become more selective. And that's the bottom line. And I think we've got 3 minutes left. So any questions, guys? No, I love it. Does anyone want to talk about anything in the last 3 minutes? Does anyone want to go over anything in the last 3 minutes?
I just one thing. Like,
Of course.
let's say you're, you know, you can be in the 70, like let's say the 50 level, the equilibrium level to the 75 level.
Yeah.
In a bullish range.
Yeah.
And when you're, that range is actually a premium range, but you can still buy in. You just talk a little bit about that. I wish I could phrase the question a little bit better.
So, are you talking about when you've got conflicting ranges? So you've got maybe a higher time frame range and a lower time frame range within the higher time frame range?
Not a lower time frame range. No. It's just how do I phrase it?
Because if you're looking at the same time frame, you can't have two ranges. You'd only have one, unless one is internal to the other, and therefore it is a lower time frame range.
Right.
For example, let's just...
I wish I could draw. I don't know how to draw this.
Tell you what to do though. Feel free to draw up on a chart, and we can maybe cover it another day, because we're going to run out of time anyway. So if we're looking at this level here, okay, this is clearly a bearish range on the higher time frame. Okay, but internal to this, we have a low time frame bearish range. Is that what you mean when you've got two ranges that conflict?
No. I'm not talking about the two ranges. I'm talking about so you see you've got the fifth. So in this example, if you get rid of the second range,
yeah.
So you've got the 50 level,
yeah,
and it goes down to the 25 level. You see that box?
Yes.
No, the 50 level. Yeah, that box. Yeah.
So this bit here.
From halfway check to basically the top of the 25.
This one.
Yeah.
So here you would usually buy it, correct? Like usually buy.
So where are we? Are we here or are we here in price?
Second half.
Second half. Okay.
Yeah.
So
after the pullback happens.
Yeah.
Yeah. So you get the pullback, and then from here you can actually start selling in this zone, even though usually it's a buy zone.
You can start selling in that zone. I wouldn't recommend it, only because if we've rejected major liquidity, which we usually have, if we've rejected major liquidity, I'm actually at a major low here, so we haven't actually got any price there. I wouldn't personally, this is where the filtering comes in to your trading. So
it's more of a B or C kind of setup.
You could get into trades and they could work out, but the likelihood is it's going to tag that equilibrium like it does here before we get the larger sell-off. And what you'll normally find is that often you have these larger sell-offs and then you still have further pullbacks into things like EPA. So you're kind of stuck in limbo here. For me, what I'd be looking at is, because this is a higher time frame range anyway, I'm not really that fussed in terms of buying and selling. Really, where I use my ranges is where I'm on very low time frames like this. So I kind of stick to the laws of the range when I'm at the lower time frames mainly. This range took, how long did it take? This range took 17 days to play out. So Alright guys, just wait for everyone else to jump back in.
Frost, I think in that example that he was showing, you got to really look at what did that low take out. If it was nothing real significant, you have a better low here, down lower, you may be able to take that short. But there better be something really nice down there for it to come to. That's my opinion, anyway.
Yeah, so I think
I was talking about like once price goes to the EPA and takes that out,
yeah,
and it starts reversing, that's when you can start.
100%.
That's why that area is the hardest area to trade, because in the first half you wouldn't really take any trades.
So this half,
So you wouldn't take any.
no.
But after it hits the EPA line, you actually trade this range a little bit differently. You can actually buy and sell in that area.
After it takes EPA.
Yeah.
Well, I would say sell.
Yeah, I'd say sell too. So once you've taken EPA, the supply's been rebalanced. The range is now efficient, so we don't need to come up any higher, which is why, as you can see on this bit of price action, let's just delete it all, which is why you can see on this bit of price action, we just have a sell-off. Because the only thing that has to happen, remember, and this is a good example of that point, the only thing that has to happen is the range has to be rebalanced. Okay, and it doesn't always happen, but I'd probably say 80-90% of the time it does. It's not like imbalances that are valid maybe 60% of the time and get retested 60% of the time. EPA is pretty much guaranteed. Okay, it's not always, just like anything, but it's one of the closest things to absolutes that you can have when you're trading. So once EPA has been met, I wouldn't be looking at buys anymore. Okay, once the EQ has been met, I would be happy, because this is a higher time frame range. I'd be happy, for example, let's have a look. It's not the cleanest, to be fair. Again, this comes back to the filtering point. It's whether you're trying to get into every single move, okay, which is impossible and unprofitable, or whether you are just filtering out the average trades to look for the excellent trades. There's nothing in this bit of price action that screams buy to me. We've had a very weak push up, which has taken out an external level. I'd probably be looking for sells from here because we'd reached equilibrium. So that sell, I might have got into something like this or something like that, maybe, but I don't know. In terms of this little section here, we've got liquidity here. That would be my key liquidity level. Because remember, when price is ranging like this, when price is ranging like that, we only really want to take trades from external levels. Okay, we don't really want to be trading at anything else, because that's the only safe, if you can call it that, trade. So if we've got external levels being taken, we can then take buys from it. But as you can see, those can often be manipulated itself. So that was then manipulated. So Asia would have happened. There was a sell here that you might have got into, to be fair. Yeah, because that's a... don't think I can get down any lower. Then we've taken out that external level as well. So you might have got into the back of that. But then within there, as you can see, this section here, that's our range from here to here. We haven't really got any external levels. We've come back into discount here. So if you were clever, you might have got into that. But this is where it can be difficult to catch entries, because when you look at the higher time frame, we're not in an area that is particularly great value. Where's it gone? Hang on 2 seconds, guys. Yeah, we're not in an area that's particularly great in value in this section here. We haven't really got any clear structure telling us we're going to go bullish. The only thing we would be expecting is the EPA level. So you might have been clever and caught a buy here or here, but it would have been difficult market conditions, and these are often those conditions that you can find you lose your money on and lose your accounts on because they're really difficult. And what I've just gotten used to after a while is just making sure that we are, we're stacking as many confluences as possible. So what would have been a lovely trade is waiting for that EPA to level, clear reaction, and then take a sell like that. Take a sell like that, and then you're much, much safer. Premium discount, it is, it seems a really simple concept, but it's actually a very difficult thing to get your head around because there's so many ifs, buts, and maybes within it. So I always say just take the trades until you're profitable and making good money. Take the trades that you cannot ignore. Okay, within here, I could have easily ignored any of these buys because I wouldn't have been absolutely sure whether it would have been a buy or whether it would be in a sell. I've got confluent reasons for me to want to go sell because I've reached my equilibrium level. I've got confluent reasons for me to go and buy because I haven't reached my EPA level. So what do? Oh, very easy. We just wait. We either wait for one of the two things. We wait for a clear break of structure and then a pullback and then a sell off like that. Or we wait for exactly what happened, which is EPA to be met, and then we wait for a sell-off like that. So, yeah, I mean, I hope that answers your question, Frost. Does it?
Yeah.
Cool.
I just wanted to acknowledge that this particular zone is extremely hard to trade, especially after the pullback. Because there's a lot of stuff happening.
Yep.
Why is it hard to trade? It's ranging,
because it's a lot of internal. It's all internal.
All internal. But why does it do that?
It's building orders, I assume.
Collecting orders, yeah. But why? Why is this move impulsive and this move so corrective?
Like in this zone check, people are looking at this and they're saying price here is, I don't know.
Bullish, probably, right?
Would you say this is bullish market?
No,
but I imagine some people from that low to where it's starting to go up, they might say that's a bull market.
This is a bull market right now on the 2-hour time frame. This section here, yeah, you are right. But what about the price action? What about this price action compared to this price action? Do we notice?
Well, one's impulsive, one's corrective.
Exactly. One's impulsive, one's corrective, and when we take all the fancy strategy away and we take all the liquidity levels and the ISCs and the BCRs, we strip all of that back. The way that we trade is ultimately based upon price action. And you see so much in the candlesticks themselves. Very, very clearly, this is bearish. Look at every single bearish move. Impulse. Massive correction. This one took 6 days. Okay? This one took 12 days. This one took 16 days. This one took 27 days. Okay, so the time in which it takes to move so we had 16 days here and 676 pips. Yeah, 676 pips. That's right. This moved at 27 days and only moved 400 pips. So it's taken almost twice as long to move 60% of the way, okay? So that in itself tells you a lot about price and a lot about what we should be waiting for. So this is where that desperation, because look, this is a month's worth of price ultimately. And if you'd been trading from July 2022 to August the 10th, my birthday, remember that, get that in your diaries, August the 10th. If you've been trading from July to August, you'd have probably had a tough month. What was I doing in July 2022? Can't remember, but it looks like I probably had a tough time. Whereas this beautiful half a month where it was all bearish, that would have been great. And sometimes zooming out and looking things like this, tells you a lot. What we'd be looking for is, let's say we get down to 30-minute time frame, we'd be looking for in these sorts of areas, it's really mucky, really mucky. You could have got a sell there by the looks of it, sell there. And this kind of comes back to my original point, is this range is relevant for the higher time frame moves. But when we're trading on a day-by-day basis, okay, what we're looking for is we're looking for smaller ranges. We're looking for price to come back into these discount areas. Then we take trades off the back of that. That was a lovely move there. So that would have been a nice buy because we're in that bullish range here. We've rejected a key liquidity level from down here. So we're bullish technically on this time frame. We've not broken the range. We've just made the range bigger. So I don't know if you guys understand that. I've spoken about it a few times recently, but look, the range is only created. So a new range is only created when we have a clear move outside of the original range like that, okay? So that would be a new range, okay? But this is not, because all it's done is it's swept it, okay? Same as that. That's not a new range either, because all we've done is swept it. So it's really important to see that when that happens, and when that happens, those little wicks, what they do is they just extend the range rather than actually changing the range to a new one. So for us, we are in a bullish range right now. We've then come back down, taken out those external levels. So that move in London would have been a beautiful little corrective move like that. So when you market conditions like this, look, we're still getting 3R out of the trades. We then stay in that range, stay in that range, stay in that range, and then we're really, really internal. And this is what those kind of those range-bound conditions, this is why it makes it quite difficult, because we're then expecting things to happen, and it often can't happen. If you find that you're in range-bound conditions, my advice to you would always be just trade the external levels only. Okay, trade the external levels. You're going to get probably stopped out a little bit more, but trade the external levels, and that will often get you into better trades, and you can go from there, really. All right. Right, I think we're done for today. It's all recorded. Thank you very much for your time. That was a really good session. I enjoyed that one. I'll clear my charts off. We're ready to go for this week. I'm doing a weekly forecast live. Unfortunately, it's in the Discord channel. So if you want to join it, it's on Monday evening about 8:30. It's a live session. I will record it and always put it in our group anyway, but it's with it's for CTI. So if you want, you're welcome to jump over into their Discord as well. And the link to it is in their Discord. Long story short, there's a channel called Live Streams, so the link to it will be in there. Sorry, not a link. It's not done on Zoom, which is why I can't share it with you guys. It's done within their channel because it's a live stream. If that makes sense, you're welcome to join that. If not, I'll be recording it and putting it up in our group anyway. But that's just a weekly market forecast that I'll be doing every week from this point going forward. All right. Hope you all have a very profitable week, and as always, if you need anything, just reach out to me anytime.